Hello traders, welcome to another Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week with some of our wave counts. This is the euro. We are looking this week for a flat formation for the second wave, the flat in the Elliott Wave theory after the impulse is going to show in your chart as a leg down, as a retrace that can move above the beginning of the previous leg up to 138.2% is valid. Then a leg down that could either hit the low, finish before that retrace, or a little bit more. And of course, that's why it's important the validation to find the end of that leg. So currently on the euro, we are here in this map. So we have the leg down, we have the retrace, and then we're looking this week for the last leg down for the flat. Once the flat formation is completed, we're going to look for the buy trade for the rejection on this area in order to capture a pretty big leg up. In the meantime, our mission is just focusing on this leg down. So let's move to lower time frames and start drilling down, finding the direction for the week. The euro has been selling off. Actually, let's have a look at the 4-hour chart. On the 4-hour chart, I'm looking for a couple of new lows before we have the retrace and the continuation. So this week, for a swing trade perspective, I'm going to focus on finding the end of this B to sell it. In the meantime, for scalping, for day trading, the best we can do is following the trend. After these 4 selling, after the next 4, after the next 4, after the next 4, but of course, being careful because each time the price makes the low is likely to be rejected and rejected. And once we have the completion of our wave A, there we have to be careful because then a deeper corrective wave will be expected. That's the one that I want to act on. So that's the plan on the euro. Let's have a look at the euro pound. The euro pound is pretty interesting as well this week. We have a leg up that I'm calling wave 1 orange. Then we have a double zigzag, WXY. The next question when you are trading with the Elliott Wave theory is how to find the end of the wave, how to find where to trigger the trade. Because I see a lot of beginners making mistakes trying to use the Elliott Wave theory and they finish absolutely frustrated. Because imagine trading like this. Oh, I see a wave 1 and I have a wave 2. I'm going to buy it because it's hitting a Fibonacci level because this and this. And the price continues and take them out. And of course, it's frustrating, especially if that happens most of the times. So I found a little solution, a simple solution better, powerful solution and simple. And it's just watching the price once it crosses the first leg. So once the price moves under the first leg, right here is absorbing orders. If that's the case, we're going to see a rejection. So I'm looking today for a candle to close above this area to go long, to buy above W right there. And if I have the candle moving above W, I can buy it. If not, I'm not doing anything. So this is called the validation process. To start seeing demand, don't forget that this is our supply and demand area. We can roughly say that this is the 50% and we need to find value under that 50%, under the fair price. And that will be the setup that I'm looking for today. Rejection, going long, minimum target the previous high, and then we will see. Probably we have a beautiful wave 3 showing up after that. The S&P has been extremely sideways lately. We have the price on the S&P almost trapped into this area. My bias is to the upside. We started the process of buying the S&P. Here we went long as well. And it seems that the S&P is getting ready to have a bullish breakout of these 170, 100, 200 area. There is a clear resistance for price. I'm looking this week for finally seeing the S&P breaking up all this consolidation and start pushing higher and higher on this leg. And let's have a look at another favorite for the week, that is oil, the CL market, the oil market. On the oil market, we are in a zigzag, in the corrective wave for the zigzag, A, B, and C. This is going to be an extremely simple trade. We're looking for price to move above this area. Imagine all the stops that are here where the wave A finished. All the sellers that are trapped, and they don't know that yet, have their stops there. Sellers become buyers. So we have a lot of buying pressure at this area. But what if, instead of seeing price pushing higher after crossing this area, we have the price moving down? That will tell that someone, of course, that will be the big guy, the smart money, was absorbing all these orders at this area. And after doing so, the price closes under A, showing or signaling a fantastic sell that we can sell there, leave a protective stop loss a couple of points above the high, minimum target this low, and if the price explodes to the downside, we can just keep the trade for longer. We can just keep the trade active, right? So following the price after this three-wave sequence to the downside is going to be the plan for the week on oil. Traders, if you want to receive this complete analysis every day, you can join us on ElliottWaveStreet.com. Under the membership tab, you will find our plans, the Forex, the stocks, or the full access membership. You can sign up and get immediate access to this world of Elliott Wave. We cover on a daily basis all these instruments. You are going to find the daily video, you're going to find the daily charts, and the education. We have a fantastic members academy, so you can improve your Elliott Wave knowledge. All right, so that's the plan for this week. Thank you for watching. Have a fantastic start of your week. Don't forget to subscribe to our YouTube channel. I'll see you soon. Take care. Bye-bye.